it's a very interesting release, isn't it? The headline numbers all look great. You got a 0.7% quarter-on-quarter increase in GDP. Consumption increased for the third quarter in a row. Business investment is up, and you get a decent boost from net exports. And to top it all off, GDP for the entirety of 2024 shows 0.1% growth over 2023, which is a positive surprise given that most people expected GDP to contract on the year. But once you actually dig into the numbers a little bit, you quickly notice that it's not all sunshine and rainbows. The only reason the economy expanded in 2024 is because of revisions to historical data. And once you strip those out, GDP would have contracted. More to the matter at hand, GDP growth in Q4, as Lynn noted, was very uneven. It came from net exports, and those rose because of a 2.1% quarter-on-quarter collapse in imports. That speaks to the weakness in domestic demand, which is really the story we've been dealing with over the last two to 3 years. So in that sense, there's nothing new. And people probably want to be careful and maybe keep the champagne on ice. It's probably not the time to celebrate.
Okay, noted. The Economy Minister Akazawa this morning talking about this GDP, saying they need to be mindful of a couple of things. You'd hope they've been mindful of quite a few things. So they've said that one of those is overseas economic downside risk, including China and impact from US policy, but also rising prices of food and other daily products may dampen consumer sentiment. What is the biggest risk on this front, domestic or external?
Certainly, both. I don't know that one is any less concerning than the other. Again, if you think about what the GDP release tells us about the path ahead, you really can't count on exports in the year ahead to save the economy. Even if exports were to do well, that's unlikely to continue because you have countries throwing about tariffs left, right, and center. So at the very least, that is going to weigh down demand abroad. And if Japan itself also gets slapped with tariffs, for example, on cars, as was being discussed over the weekend, that would slow growth. But let's remember again that the reason net exports ticked up was just because of the contraction in domestic demand. And that speaks to the weakness in consumer spending, which has to do with pay gains trailing inflation. Inflation looks stickier than previously expected, which means real wage growth is getting pushed further into the distance. So it's really hard to see where growth this year is supposed to come from. So these two things, they're very much related, and they make it very hard for both fiscal and monetary policy to navigate this juncture because you're dealing with sticky inflation on the one hand, but also with very weak growth on the other hand. And that makes the policy setting quite difficult.
Yeah, it's very hard to say how many hikes, right, from this stage, even though the market is factoring in one more for sure, and then we'll see. Stefan, do want to get your sense in on the currency movement because it's been a narrow band, but very volatile within that narrow band. So between 151 to 155. Yeah,
it's a good point. Trading has been pretty jumpy these last couple of weeks. Today it's pretty mild by comparison. But I would say overall, my sense is that markets are still jumpy, they are still jittery. We saw that the yen weakened tremendously when the release of US CPI came out and surprised expectations on the upside. Then a few days later, when we got US retail sales surprised on the downside, the yen went the other way. And those were big moves. There were moves of 2 to 3 yen or so. I just always think back to the pre-COVID years when the yen would maybe move 2 to 3 yen within an entire year and not much would happen. These days, we're getting that sort of move in a single week. So I think it speaks to the fact that there's just a lot of uncertainty out there, both on the upside and the downside, and markets are struggling to price that in. On the whole, my sense is the yen is still pretty weak, is still pretty oversold, and coming rate hikes by the Bank of Japan might help on that front a little bit. But there's risk in both directions.